If you're hoping to buy a home, buy a car, really get any type of loan in general, then it's crucial that you have a credit score and one that is somewhat decent. In this video, I'm covering the 5 factors that determine your credit score, so make sure to stick until the very end. You may recognize me from my other YouTube channel, The Couch GM, where I talk all things baseball, and if that's you, make sure to leave a comment in the comment section below, and let's get into it. So first off, what even is a credit score? Well, in short, it's a number that demonstrates to a lender your ability to be able to repay that debt or the amount of money that they'll be lending to you for whatever reason. Credit scores typically range from 300 to 850, 300 basically meaning that you're not going to pay the money back, 850 meaning that it's a guarantee. Your credit score determines what loan programs you'll qualify for, what the interest rate on that loan will be, and potentially your max loan amount. The first factor in determining your credit score and the most important factor is your payment history. So are you making your payments on time? Do you have any late payments, any 90-day late payments, a foreclosure, a bankruptcy, any other derogatory marks? The worst thing you could do for your credit score is to miss a payment, so make sure you make at least the minimum payment on time. The second factor in determining your credit score, and the second largest factor, is the amounts owed or your credit utilization. Your credit utilization is pretty simple, so out of the amount that you're allowed to borrow, how much do you currently have loaned out? In general, the lower the amount of your total utilization, the better it is for your credit. For example, if you have a $10,000 limit on your credit card and you currently have a balance of $1,000, then your utilization is 10%. Credit card companies and banks typically report to the credit agencies once per month, so depending on what your balance is on that specific date, that will be the balance that is showing up on your credit report. If you're actively getting pre-approved for a loan and you've paid your account balance down to a point to where it may positively affect your credit score, then we can actually get a current balance letter from your account, send that off to the credit agency, and do a rapid rescore so that your credit score could be boosted before the next cycle. If you have any questions on this piece, please let me know. The third factor that goes into determining your credit score is your credit age. Your credit age takes up about 15% of your overall credit score, so it's not quite as big of an impact as the first 2 factors. In general, the longer of a credit age you have, the better. So if you open up a new account, it might have a negative impact on your credit score in the short term, but long term, the longer that account is open, the more it will help your credit score. A few tips to help with your credit age is if you're paying down an account or paying off an account, do not close out the account. If you close out an existing account, it may shorten your credit age, which may negatively impact your score. Also be aware that certain accounts that aren't used for a certain amount of time may automatically be closed out by that institution, so it may be worth using that card or account once a year to avoid that account being closed out. The fourth factor that goes into determining your credit score is the amount of total accounts that you have open. The amount of total accounts you have open only makes up about 10% of your credit score. In general, the more accounts you have open and the more diverse of accounts you have, for example, a credit card, a car loan, and a mortgage, the better it shows your ability to be able to repay your debts. The fifth and final factor that goes into determining your credit score are the hard inquiries that you have on your account. Hard inquiries also make up about 10% of your credit score. A hard inquiry occurs when a lender reaches out to the credit bureaus to request your credit report to see your total account history. In general, this is the lowest impact on your credit score, and this will only occur when you're actively looking to acquire a new loan. So to recap, the 5 factors that go into determining your credit score are your payment history, your amounts owed, the credit age, total accounts, and your hard inquiries. If you found this information helpful, please hit that like button, make sure to subscribe, and we'll see you later.